Welcome in Competency Appraisal Course Auditing. So I am Jovit G. Cain, and my task to you is to discuss the audit of production cycle. So audit of production cycle includes audit of conversion activities, audit of inventory balances, which include work in process and finished goods inventory, and audit of cost of goods sold balances. So there are 6 functions that make up inventory and warehousing cycle with its related documents and or records. So in auditing production cycle, the auditor must first understand the flow of documents in the accounting information system of the company. So from process to purchase orders, which includes purchase requisitions and purchase order. And then later on, it will be received by the company or receive raw materials. Related documents are the receiving report and supported with vendor's invoice. Then store of raw materials. So raw materials purchase perpetual inventory master file. The process or production of goods, which includes raw materials requisition and cost accounting records. And store finished goods, which includes finished goods perpetual inventory master file. And lastly, for the shipment of finished goods and its related documents such as shipping document, the finished goods perpetual inventory master file, and the cost accounting record. So these are the different or 6 functions that make up the inventory and warehousing cycle, and with its related corresponding or documents and or records. So again, for us or for the auditor to be able to understand the flow of the production, so here is the sample of a document flow chart of the production cycle. So each department has its own role. So for the store, production, cost accounting, finished goods warehouse, and part of cost accounting is the general ledger. And let's start with the production. So production, to begin with, the production department will then prepare production order and materials requisition in 2 copies. So there are 2 copies for production order and 2 copies also for materials requisition. So the first copy for the production order will be given to the cost accounting department. And the cost accounting department will then file those production orders in numerical order. So yung letter N. And then for the materials requisition, the first copy will be given to the stores. And the copy or the second copy for the materials requisition along with the production order will then be filed in numerical order by the production department. And then for the materials requisition, the store will issue raw materials, and then it will note issuance on materials requisition, and then it will update the materials requisition output or the document. And this document will be given to the cost accounting department to be merged with the updated cost records for raw materials issued. And then the production department will then prepare a report for the status of the production process or the goods. Okay. So by this, the production department will prepare 2 production report, and the first copy for this one, or the second copy is merged to the materials requisition and the production order, and then later on, these 3 documents, the production order, the materials requisition, and the production report will then filed by the production department in numerical order. While the first copy for the production report will then be transferred to the finished goods warehouse. So the finished goods warehouse will then inspect the goods and compare the production report, and then later on they will sign the production report to be given to the cost accounting for record and updating of the cost records. So aside from the issuance sa materials requisition, the production report, part also of the recording or of the updating of the cost records of the company. So they will be also take into consideration the time cards for the payroll related to the production. And then they will post the updated cost records to the finished goods ledger and prepare a monthly cost summary. And this monthly cost summary will be given to the general ledger for posting to its corresponding general ledger. So this is the production flow chart of or in auditing expenditure cycle. Ayan. So the next one here is a substantive test of transaction or production transaction. So this is presented in accordance with the assertion. To verify existence or occurrence of assertion, so the audit objective is to determine that a recorded production transaction occurred. So what you're going to do is you're going to select transactions, examine signed materials requisition, approve labor tickets, and allocation of overhead. So you're going to start with records from the transaction down to its different source document. Like for example, for raw materials, you're going to check for materials requisition, for the direct labor, for labor tickets, and for the overhead is for the allocation of overhead. So from records to the different source document. And then for completeness of assertion, the purpose of this one, the objective for this one, is to determine that all production transactions that occurred are recorded. So with this, as you can see, ayan. So we have already discussed the filing in numerical order or in sequence. That's why you're going to account for a sequence of production reports, account also for the numerical sequence of the materials requisition, and reconcile time cards and labor tickets. So from source document to records. So that is completeness. Now for valuation and allocation, so what they're going to do, or the audit objective for this one, is to determine the production transactions are recorded for the proper amounts. So in terms of audit procedure, you're going to test cost records by tracing to the underlying documents such as the bill of materials as to the amounts of direct materials, for direct labor, the labor tickets, for authorized labor rates, and standard overhead rates, and even review for the variances. Now for the last one, which is presentation and disclosure. So in this case, you're going to determine the production transactions are recorded to result in presentation and disclosure in accordance with the applicable standard for PAS or PFRS. So what you're going to do in terms of presentation and disclosure, you're going to check accuracy of the account coding, so the correct presentation of the account title as reference to the chart of accounts. And even you're going to check also the disclosure requirement or any disclosure requirement needed, and then also financial statement. So these are the different substantive test of transaction under production transactions. Okay. So let's try to answer the MCQ or multiple choice question theory. So the first one here, the auditor tests the quantity of materials charged or work in process by tracing these quantities to A. Is it receiving reports? B. For materials requisition reports. C. Perpetual inventory records, or the last one, cost ledgers. Okay, so try nyo that. So what do you think? Okay, so the answer for this one is syempre, the materials requisition forms. So materials requisition is used to issue the quantity or materials to be charged or to put into process or in production process. So that's why you're going to check for the materials requisition forms. Ayan. Now for number 2, an auditor most likely to inspect loan agreement under which an entity's inventories are pledged to support management financial statement assertion of A. Existence or occurrence, B. Presentation and disclosure, C. Completeness, or D. Valuation or allocation. Okay, so the answer for this one is B. Presentation and disclosure. So we're going to check for proper disclosure requirement in the notes of financial statement, especially for those inventories that are pledged as collateral. So to make sure that all of the information needed, especially in terms of this one, okay, will be available to the users of the financial statement. Okay, for number 3, an auditor selected items for test counts while observing a client's physical inventory. The auditor then traced the test counts to the client's inventory listing, and this procedure most likely obtained evidence concerning A. Existence or occurrence, B. Rights and obligations, C. Completeness, or D. Valuation. Okay, so the answer for this one is completeness. Kasi you're going to start with test counts, which is a source document, to the client's inventory listing or the records. So from source document to records, you're talking about completeness assertion. Examination of the completeness assertion. Now for number 4, after accounting for a sequential of inventory tags, an auditor traces a sample of tags to the physical inventory listing to obtain that all items A included in the listing have been counted, B represented by inventory tags are included in the listing, or C included in the listing are represented by inventory tags, or D represented by inventory tags are bona fide. Okay, so the answer of this for this one, syempre, letter B. To make sure that the source document, or shall we say the inventory tags, are included or recorded in the inventory list. Ayan. And lastly, for number 5, purchase cut-off procedure should be designed to test whether all inventories A. Purchased and received before year-end was paid for, B. Ordered before year-end was received, C. Purchased and received before year-end was recorded, or D. Owned by the company is in the possession of the company at year-end. Okay, so usually pag cut off, no, it's more on completeness. Kaya siya letter C. Purchase and received before year-end was recorded in the books of accounts of the company. Okay, so these are all the different MCQ theories. So now let's proceed to MCQ computation. So for illustrative problem number 1, suggested solutions. So the problem here is this one. So the Naruto company values its inventory at lower of FIFO or NRV. The inventory accounts for, or at December 31, 2019, had the following balances: raw materials, work in process, finished goods. And then the following are some of the transactions that affected the inventory of Naruto company during 2020. So you do have your transaction for January 8, February 14, March 1, April 3, August 30. And take note also that based on the above and result of your audit, answer the following, or for the next question, assume that the client is using perpetual inventory system. Again, assume that the client is using perpetual inventory system. So the first question, what is the entry on January 8 will include a debit to raw materials inventory of. Okay. So, ano pala yung January 8 transaction? So, this one. So, January 8 transaction, narrow to purchase raw materials with the list price of 200 and was given a trade discount of 20% and 10%, terms 2%, payable within 15 days, net 30, and narrow to values inventory at the net invoice price. Okay. So the question is how much should be debited as part of raw materials inventory. Take note that the company is using net invoice price in recording inventory. That's why, so the solution for this one is that 200, which is the list price of the materials, multiplied by 80%, which is the net amount for the first trade discount to 20%, and then 90% naman, which is the second trade discount, or the net amount for the second trade discount na 10%. And lastly, for 98%, which is the cash discount na 2%. Take note kasi sabi niya, net invoice price. That's why we multiply the net amount of 0.98 or 0.98%. So if you're going to multiply ito lahat, so the result is 141,120. That's why the answer for question number 1 is letter C. 141,120. Okay. Now for number 2, this one, the repossessed inventory on February 14 is most likely to be valued at. So ano pala yung February 14? So February 14, narrow repossessed an inventory item from a customer who was overdue in making payments. The unpaid balance on the sale is 15,200 and the repossessed merchandise is to be refinished and placed on sale. It is expected that the item can be sold for 24,000 after estimated refinishing cost of 6,800. The normal profit for this item is considered to be 3,200. So, what is the repossessed or the repossessed inventory on February 14? So, take note, this is repossessed item and the repossessed item is valued at net realizable value less the normal profit. In this case, estimated selling price 24,000 less the refinishing cost or estimated cost to sell, that is 6,800. So, meron siyang net realizable value of 17,200 less the normal profit as mentioned in the problem. Therefore, the valuation of repossessed inventory is 14,000. So, the answer for this one is letter A, 14,000. Okay, now for number 3. What is the journal entries on April 3? Will include A. Ayan. So, April 3, ano pala yung transaction? This one. The sale of the repossessed item. But take note, we must also include March 1 transaction. That's because it will affect the recording for April 3. Ayan. And take note also that the company is using perpetual inventory system. Ito lang close, saka auto. So, for journal entries on April 3, 2020, ayan. So, for cash, which is the down payment of 4,800, 20%. And then the balance is accounts receivable, 19,200. And therefore, the sale of repossessed inventory is at 24,000. And take note, this is perpetual inventory system. So, in terms of sale, there are 2 journal entries. The first entry is to record the sale. The second one is to record the cost of repossessed goods sold. The cost of goods sold. So the cost of repossessed goods sold is 14,000, which is the true value or true worth of the repossessed item. Plus 6,400, this is the March 1 refinishing cost. 6,400. Therefore, the total cost of repossessed goods sold is 20,400. And credit the repossessed inventory at 20,400. Therefore, based on the journal entries, the answer for number 3 is letter B. Credit to reprocessed inventory of 20,400. Okay. Now for number 4, the trade-in value of inventory on August 30 is most likely to be valued at. Ayan. So August 30 transaction is a sale of on account was made of finished goods that have a list price of 59,200 and the cost of 38,400. A reduction of 8,000 of the list price was granted as a trade-in allowance. The trade-in item is to be priced at sell at 6,400 as is, and the normal profit on this type of inventory is 25% of the sales price. So again, the question, what is the true value or true worth on trade-in inventory? Now take a look at this one. It has an 8,000 B as an trade-in allowance. And to compute for the trade-in value true worth, same pa rin po, which is the net realizable value less the normal profit. So in this case, the estimated selling price is automatic that NRV is because walang cost to sell. 6,400. Then, less normal profit of 6,400 times 25%, therefore, which is 1,600, thus the valuation of trade-in inventory is 4,800. So the answer is letter B. And lastly, for number 1, how much will be recorded as sales on August 30? Ayan. So the sale on August 30, first one is your to compute for any over or under allowance. Take note that the allowance for trade-in was 8,000, right? And then it was found out that the true worth of the inventory is only 4,800. Therefore, there is an over allowance of 3,200. So what you're going to do, you're going to deduct this one in the sales. So the sales was 59,200 and the over allowance deducted 3,200. Therefore, the amount to be recorded as sales is 56,000. Or the correct amount of sale or sales is 56,000. Yeah. Letter B. Okay. So we're done with the first one, which is the first illustrative problem number 1. So let's proceed to illustrative problem number 2. Okay. So illustrative problem number 2, during your audit of records of CAC Corporation for year end December 31, 2019, the following facts were disclosed. So you do have the raw materials inventory, the raw materials purchases total, the direct labor, manufacturing overhead applied, finished goods inventory beginning, selling expenses, and administrative expenses. And then, your examination also disclosed the following additional information. So the letter A, the purchase of raw materials, that's fine. B, the data with respect to quantities are as follows. And C, raw materials are issued at the beginning. During the year, no returns, spoilage, or wastage occurred, and each unit of finished goods contains 1 unit of raw materials. And lastly, inventories are stated at cost as follows. So the raw materials are in accordance with FIFO method, direct labor an average rate, and manufacturing overhead is applied rate of 150% of direct labor cost. Okay, so let's start with the question number 1. So how much the raw materials inventory as of December 31, 2019? So to compute for this one, you must first compute how much is the raw materials inventory in units. Kasi naka-question mark pa yan siya. Ito. That's why we're going to make use the pro forma in computing cost of goods sold. So we start with the goods sold. Goods sold in units is 200,000. And then finished goods less 40,000 and the Therefore, to compute for total goods available for sale is 200 plus 40,000 or 240,000. Next one is the finished goods beginning, 15,000. So to compute for goods manufactured, 240. And in this case, we're going to deduct finished goods beginning. Ayan, kasi workback po tayo, no? 225,000. And then, work in process. Take that work in process is 80% completed, no? 25,000 units. So therefore, to compute for goods placed in process, so 225 goods manufactured plus 25 na work in process ending. Therefore, goods placed in process is 250,000. And next one, we're gonna compute the raw materials get and even this one. So we're going to start the beginning. So the beginning raw materials of 35,000 plus purchases as mentioned, 265,000. Therefore, the raw materials available for use is 300,000. Now we can compute the raw materials ending. So to compute for raw materials ending, 300,000 less the 250,000 goods placed in process. Therefore, the raw materials ending in units is 50,000. And then we will use 50,000 later on as the basis to compute for the total amount of raw materials. And take note, this is in units yet, so we're going to compute for the total amount. So the basis is 20.8. How come it's 20.8? Take note that the company is using for FIFO method of pricing. That's why the basis for the price of ending inventory is the latest purchase price. So November to December purchase price, which is 20.80. So the answer is 1,040,000, which is letter B. Okay. Next one. The work in process inventory as of December 31, 2019 is. Okay. So work in process is composed of 3 manufacturing costs or cost elements. So the raw materials, the direct materials, direct labor, and factory overhead. So take note also that the work in process ending is 25,000 in units. But the question here is in total amount. That's why the first line item here is the raw materials. And as you can see, dalawa po siya, no? 10,000 units at 20.80 and 15,000 units at 20.40. How come it is this one? So take note, based on the price, diba, we have discussed already that raw materials are priced in accordance with FIFO method. So the latest purchase price. So that's why the 60,000 latest purchase, it was already deducted by 50,000. That's why the remaining amount is 10,000. And 10,000 or the first 10,000, the basis of this one is 20.80. And as you can see, 25,000 is the work in process. So meron pang remaining 15,000, which is the base. The basis is the September to October purchases, which is at 20.40. Okay. That's why the raw materials is 540,000. Okay. Next one is direct labor and factory overhead. So, how come it is 20 at saka 30? So, to compute for this one, we must first compute the EUP, equivalent unit of production. So, equivalent unit of production, the beginning, started and completed is 225,000. So, since this is completed already, the work done is 100%. And the EUP is 225,000. The work in process ending, 25,000, which is 80% completed. That's why the equivalent unit is 20,000. Therefore, the total EUP for this one is 245,000. So this will be used as denominator to compute for the labor unit cost and overhead unit cost. So 4,900,000 divided by 245,000 units. So labor unit cost is 20. Ayan. And then overhead unit cost is 7,350,000 as given, divided by 245 units as the equivalent unit of production. Therefore, overhead unit cost is 30 pesos. That's why, multiply this one based on 20 and this one based on 30. Therefore, the direct labor is 400,000, which is 25,000 units times 80% completed, multiplied by 20, the labor unit cost. And factory overhead is 25,000 units times 80% completed times 30 pesos. So 600,000. So the total work in process ending is 514 or 1,514,000. Okay. Next one is the finished goods inventory as of December 31, 2019. So, to copy for this one, same. Finished goods has also 3 accounting or cost elements. Raw materials, direct labor, factory overhead. So, the raw materials, the basis of this one is the price, purchase price. So, take note that the first 60 was already exhausted. So, therefore, 45 part of this one was already used kanina, 20,000, 15,000. So, therefore, meron pa siyang remaining 30,000. 30,000 as the raw materials based on 20.40 price. And then, take note that finished goods ending is 40,000. So, lacking 10,000 units, which is the basis for this one, is the July to August purchases, which is at 20. Therefore, the total raw materials is 812,000. And then direct labor and factory overhead, which is based on the computed labor unit cost and overhead unit cost. Okay. Ayan. That's why, for direct labor, 800,000, factory overhead is 1,200,000. Thus, the total finished goods inventory ending is 2,812,000. Okay, so we're done with the first three. And the last one, the cost of goods sold for the year ended December 31, 2019. So, don't forget the pro forma in computing cost of goods sold. So, to start with, raw materials beginning, add purchases. That is the raw materials available for use. Then, less raw materials ending, which is the answer for number 1. And that is the direct materials used. And direct labor, factory overhead, the 3 cost elements of the manufacturing cost. Add work in process beginning since 0, therefore automatic total cost placed in process. Less work in process ending as the answer for number 2, and that is the cost of goods manufactured. Add finished goods inventory, and that is the total goods available for sale. Less finished goods ending, and that is now the answer, cost of goods sold, which is 14,077,000. Okay? So, that is for illustrative problem number 2. Okay? Ayan. Now, for the next one, let's have the illustrative problem number 3. And this is inventory estimation. So, on March 31, 2019, Kachan Company had a fire, which completely destroyed the factory and building and inventory of goods in process. Some of the equipment was saved. After fire, the physical inventory was taken, materials was valued 750,000 and the finished goods at 620,000. So they cannot determine how much is the goods in process or work in process inventory. So the inventories on beginning January 1, 2019 consisted of the following materials, goods in process, finished goods. And the review of the accounting records disclosed that the sales and gross profit on sales for the last 3 years were this one. The sales for the first 3 months, 2019, were 3 million. Materials purchases were 1,250,000. Transportation and purchases was 100,000. And direct labor cost for the 3 months was 1 million. For the past 3 years, factory overhead cost has been 80% of direct labor cost. So for question number 1, how much is the gross profit rate to be used in estimating the inventory of goods in process destroyed by fire? So our basis is the 3-year previous gross profit in sales. So gross profit divided by sales for 2016 is 30%, 2017 is 29.14%, 2018 is 35.52%. So based on these 3 previous years, we can now compute for the average. And the average for 2019 is 31.55%. So the answer for this one is letter A, 31.55%. Okay. So again, compute first each year gross profit rate, and then the gross profit rate, add or sum it up and divide it by 3 to compute for the average gross profit rate. And next one, the cost of goods placed in process, the total cost of goods manufactured, and inventory of goods in process loss. So these 3. And to compute for this one, we will use once again the pro forma in computing the cost of goods sold. Ayan, don't forget that one, ha? How to compute for cost of goods sold. So raw materials beginning, add purchases, and freight in sa raw materials available for use. Less raw materials ending, so raw materials used or direct materials used, plus direct labor and factory overhead, the 3 cost elements. And therefore, the total manufacturing cost is this one. Okay. Work in process and beginning, add to compute for the total goods placed in process. So this is the answer for number 2. And then we cannot proceed yet since the question for number 4 is the work in process ending. So we'll start at the bottom. The cost of goods sold. Cost of goods sold is 3 million times the cost ratio 68.45%. This is the difference of the sales, 100% less the average gross profit rate as computed in number 1. Ayan. Then add finished goods ending to compute for total goods available for sale, and less the beginning finished goods to compute for the cost of goods manufactured. So this is the answer for number 3. That's why the answer for number 4, or the total loss work in process, is 2,951,500. Okay. So, ayan. Thank you po for your time and effort for listening to my discussion. This is the end of the presentation and my references. So once again, thank you and God bless.